Welcome to Core Invest Sector Analysis Series.
And today we want to bring to you energy and utilities.
Yes. And before we share about this series, let us introduce ourselves. I'm Jeremy. I've been investing for more than 10 years, and I have been in the fund administration and compliance for 5.5 years. And that is where I can bring a lot of my skills and experience to share with you.
And myself, I'm Wai Min, and I have been in corporate healthcare for 28 years. 3.5 years ago, I went into semi-retirement, set up my own consulting firm, as well as full-time trading. I've been doing stocks for 20 over years, and since I started doing options, it has been very profitable, and I started to share as a hobby. Today, I've been teaching stocks and options together with Jeremy for a few years now.
Alright, so today we are going to talk about 7 pointers over here about energy and utility. First of all, how are we looking at the E and U sector, right? The energy and utility sector. What is happening right now? What is happening now? What is happening in the S&P 500? What are the XLE and XLU, right? They are the ETF of the energy and utility. What is the stock performance? What is happening, right? The performance of the stocks. And who is investing, which guru? And how does it affect us? And last of all, what can we do about it?
And before we share more with you, we want to make sure that we cover the disclaimer. Whatever we speak today is of our personal capacity as speaker, Jeremy and myself. It is not at all any form of recommendation. They are only for your education and entertainment purposes. Please always do your due diligence before you make any investments. And of course, as you know, past performances are never a guarantee of future outcomes. Please do not share or circulate the material that you shared over here.
Yeah. So, in this series itself, I'll be covering about energy, and Wai Min will be covering about utilities. Alright, so that it will make it clear that we are talking about two different industries itself.
By the way, Jeremy, why are we combining energy and utilities, and why now? Huh?
Oh yes, okay. So why are we combining? Because they are closely related, right? Especially energy, right? We're talking about the renewables, the green energy, the solar power. But then it has also got to do with utilities because you are generating electricities. It's also a part of energy, and it's part of what we always use for utility, right? So it's kind of nice that we combine them together so that it's easier for you to relate and to understand that they are somehow interlinked. But in energy itself, you can say people are talking more about oil prices, more about production, exploration, and utility is more about how people use that service itself. So you can see the difference. Yeah. So that is why we combine them together.
Okay, thanks for that, Jeremy.
Okay, so if that's the case, let me start by sharing about energy, right? So energy, we are talking about companies that produce, supply energy, right? That's why I mentioned earlier. Exploration, development, oil and gas reserve, drilling, refining, integrate power utilities, all about looking for the oil rigs, in the sea, deep sea, and so on and so forth. And also the renewable energies and coal, right? Digging the coal from the ground itself. And they are often categorized into two different kinds. One is non-renewable and one is renewable, right? What I mean by that, non-renewable means that once you use it, right, you can't use it anymore. It becomes nothing, or becomes ash, or becomes something that is not being used again, right? And renewable means that you can continuously use the same thing again and again and again. And that is when, for non-renewable, we are looking at those like petrol, which is we use when we drive our cars, we need to pump petrol, natural gas, gasoline, diesel fuel, heating oil, and even nuclear, right? Because once you use nuclear, once the nuclear is that thing is dead, the atom is dead, you can't use it anymore, right? So that is the nuclear over there. And in terms of renewable, right, we have 4 over there: the hydropower, the biofuel, the wind power, and the solar power, right? So this is something that as what more question that Wai Min was asking, the Joe Biden thing, right? Where that was a question that was missed out. So it's actually Joe Biden. We are going to share a bit more about his plans, but he's looking more into green energy. So it's nice to look at energy and utility together. Yeah. And then what about utilities, Wai Min?
Right. So what is utilities? So basically, as we all know, remember Monopoly or not? When we play Monopoly, there are two very important cards. They are the utilities. One is electricity, the other one is waterworks, if you remember that. So basically, utilities, we are talking about public services, and they are broadly divided into 5 types, as we put in the bullet point there: electricity, water, damming, because you create energy using dam, sewage, of course, it is part of the public services, and natural gas for cooking. These are the 5 areas of utilities.
All right. So coming down into the different categories when we talk about energy itself, right? There are the drilling and production, the piping and refining, the mining companies that mine the coal, the renewable energies, and the chemicals.
Okay, for the utilities, they are categorized under 4 categories. They are basically looking at upstream or downstream. For the upstream, it is in terms of generation of utilities, power, and then you have the network operators, traders and marketeers, and finally, the service providers and retailers. So these are, for example, the S&P 500, all the companies in utilities are basically categorized into these 4 broad areas.
All right. So what are the key takeaways, right, for energy itself? First of all, we will understand that energy sector business produce and supply energy, right, like fossil fuels and renewables. Important driver of industrial growth, right? Because you know that for any kind of construction or any kinds of movement, transportation, all requires what? Fuel, right, to power the economy. And that is where the industries are classified based on how the energy is being sourced. Now, just now as mentioned, non-renewable or renewables.
So the key takeaways for utilities are a couple of points here. It is a basic services, and it is also a profit companies, right? So they earn profit on public services, and because of that, it is highly regulated. Just imagine if, let's say, our electricity are charged too expensive. You cannot do that. So they are regulated, price are controlled over there. So it is a profit company, public services. And because of that, the returns are actually, margin or profit are not very high. So people who go into utilities are more for long-term holding, more for dividend payment. So it is a very safe kind of stock under the utilities, more of defensive play. By that we mean when the market goes down, like recession, people will continue to use all kinds of utilities. As we mentioned, those 5 areas, people continue to cook, electricity, water, etc. So in the times of depression or recession, defensive play will come in, where even prices of utilities can go up. But on the reverse, when economy grows well, that's where people will go for a higher yield return, and they will move money away from defensive like utilities into the high growth. So this is where it is more stable over the long term and very safe companies there.
All right. So what is happening now, right? Basically, we want to understand that the US election has just over, and we know that Biden will be leading the next presidency, right? And that will happen in January. So what is going to happen when Biden has officially, take up the post? And this is something that we need to take note of, is that what is his plan, right? So his plan is that he wants to lead the world to address the climate emergency and lead through power of example, right? By ensuring that US achieve 100% clean energy and net zero emission no later than 2050. So if that is the case, right, now we are at end of 2020, and we're coming into 2021, which is his start of his term. So during his 4 years term itself, the first 4 years itself, we want to see that, what is he going to do, right? So he's going to press on and push on. He wants to establish an enforcement mechanism that includes milestone targets no later than end of his first term in 2025, right? And makes a historic investment in clean energy and climate research and innovation, and incentivize the rapid development of clean energy innovations across the country or across the economy, especially in communities most impacted by climate change. So think about it. This is something that everyone needs, right? Green energy, because of the humans are actually, the temperature is getting higher and higher, and humans are actually suffering from the heat and so on and so forth. And this is very important. And then we also can look at in terms of the chain of production, right? Like say, for example, if green energy, you are looking at solar panel, what are the different parts that are being used for the solar panel, right? So you need the microchips, you need metal, you need steel, you need so and so forth. And these are the contributors to creating the solar panel, right? So not just looking at the solar panel, right, which a lot of countries, a lot of companies do, right, building solar panel, we can also look at the production line and then see whether is there a chance to actually gain a capital gain or something got to do with solar panel. And that is where you can see a rise in your portfolio in that case, right? Because these companies are going to make money, right, through selling those parts to the company that makes the solar panel, right? So it's a very interesting concept, looking at green energy as the next in, and also from now 2021 onwards, what can we look out for?
So on the oil side, oil this year in 2020 made history. For those who are in the market, you know that in the period of March, there was a huge drop in the price. So it was a double black swan where COVID hit in February, the price dropped and tanked like about 30%. And in March 20th, actually, there was a oil crisis. So you can see that the peak of the highest peak over here was sometime during the early 2010s, and then suddenly it has gone down even to negative price. In fact, the price went negative where the producers are actually paying people to buy their oil because there was too much supply and there's no place to store the oil. So the price have tanked tremendously, even up to negative. The price today have gone up back to about $40 per barrel, but still it is not at the level of the $50 benchmark. So basically, there was this oil war between Saudi and Russia that causes all this decline. And how long will it take? Will it come back? That is something that will be discussed soon.
Okay, so let's take a look at the whole macro in terms of concept, other than just looking at energy itself or utility. We just want to take a look at what kind of how expensive different countries are. So that is where we look at the fundamentals, where you can see United States highlight in the red box, right, and the blue boxes, the developed market, the world itself, as well as the emerging Asia Pacific. And you can see that in terms of the CAP model, you can call it as the Schiller PE also, taking off on the noise of the country itself. You can see that it's at a very high, high side, the fourth most expensive kind of situation, 29.8, right, holding a weightage of 47.6%. Okay, and you can see that the 29.8 is much higher compared to the world and the APEC average, right? So if that's the case, right, even though we are looking at utility or energy, we must know that currently most of the companies are already sort of overpriced already in terms of the country itself.
So now let us look into the sectors. As Jerry mentioned, the US Schiller PE is at 29.8, almost like 30. The S&P is at 32, even higher. What does that tell us? That the top 500 companies on average, the S&P is even higher than the US total. Telling us that there could be overpriced. Now what about energy? Energy is minus 5.3. As we said that the price actually went negative this year and it has not fully recovered yet. And so in fact far from. Utility is still doing well, and we say that it is a very stable utility market at 21.5, very reasonable. Let's look at the 5 years. The 5 years, you can see that the SLE, which is the Spider S&P 500 for energy sector, it was at minus 48. And if you look into the last year, it was about minus 40. So this has been a degrowth over the 5 years and for the last past year as well. Looking at the SLU, which is the Spider S&P 500 for utilities, it was at positive 47, which was 5 years, which was fantastic growth over the 5 years. But then you can see that for the past 1 year, the growth has been very much down still at a positive 1% there. Okay, so that gives a good overview of where the two sectors are standing in terms of S&P.
So let's talk about the S&P 500 index itself, and we want to see the top 50 companies that is actually having a market contribution of 55% of the whole US. So if that's what it means is that this top 50 companies is moving the market itself, and it's very nice that we can see that there are 3 companies that is in the energy and utility sectors. They are part of the top 50. All right, so 2 of them are actually from the energy, and 1 of them is from utility. And 2 energy companies are the Chevron Corporation, ranked 37, and also the Exxon Mobil, which is ranked 39. Yeah, so both of them are from the energy sector. And then we have the Next Era Energy, NEE, from the utility sector, right? So it's very nice to see, these 3 very huge companies, very big market caps, they are in the top 50 of the whole S&P 500. And when it comes in terms of looking at the whole S&P 500 in terms of the energy sector itself, you can see that as what we have highlighted in the red box itself, the top 2 companies, CVX and XOM, they are the top 2. And however, in the S&P 500, there are 20 over companies. They are part of S&P 500, right? So 20 over companies. So you can choose and put in your watch list to see which is the better ones. And of course, the bigger the company, the better it is. And in CII, we always suggest that in Core Invest, CII, we always suggest to look at companies above 20 billion, right? Because they are companies that are big and strong, right? And they are not easily, being pushed down. So if that's the case, from 20 billion onwards, that will be nice, to look at and put in your watch list, right? So this is other 20 energy companies in S&P 500. How about the utility, right? So utility, there are 28 companies in the utility sector in the S&P 500 index itself, all right? And we have highlighted NEE as one of them in the top 50, right? So that is 146, billion market cap, which is so huge. It's like almost 3 times the size of the second one, the second biggest one, which is DUK, right? Duke Energy, right? So again, same thing as what I mentioned. Look at companies 20 billion and above, and you can put it in your watch list. Where you can see which one can work better for you, right? So we'll be explaining a few more later with regards to the performance of these different companies in the energy and also the utility itself.
Okay, so now you have seen the big companies and the top companies within the S&P 500 for utilities and energy. Let us now look at the trend. How have they been trending for the past 20 years? Now, first of all, look at the price graph over here. This is the S&P 500. So you see how S&P 500 has been trending for the last 20 years. Of course, you know that in the 2007-8, after the last depression, it was a bull run. Until this year, February, March, there was a huge correction of about 30% drop, but now it has actually fully recovered. Now the question is whether this recovery is the start of a new bull after the recovery, or is it end of the last bull? That is something remains to be seen. Now, comparing then 2 other graphs here, the top yellow graph is gold, and the bottom yellow graph here is bond. So you can see that there is actually, because gold and bond are safe haven, people will turn to gold and bond when market becomes very volatile, or uncertainty comes in, or risk is coming, or recession is coming, or when bubble is building up, because people's confidence on the market may waver and they want to move some of the money to diversify into safer haven like gold and bond. So here you can see that when the market goes up over here, bond may go down, all right, because they are moving the money towards the growth. And especially when things are starting to grow very fast, people may start to again drive that. But over here you can see it is now moving together, that it is almost parallel, because bubble might be building here and people's confidence becomes less, and they shift market and money to the bonds and to the gold. So this is where you see the trending in the same way. Now let us now look at silver. Silver, what shape does it mimic? Do you see that silver is having almost a similar same shape as the gold, but to a lesser extent? And that's what it is. Of course, the growth also is actually potentially higher because this is where silver is compared to the highest of the silver. Where is gold? Gold is now same or even slightly higher than the previous high. So you can see the potential here. Let us now compare with the XLE and the XLU. Right, the blue line here is actually XLE, which is energy. So the remark here is that more than 60% of the time, the gold, okay, and the oil, which is energy here, are almost with direct relationship, meaning when gold price rises, oil prices will also rise. So it is the coming together. So there's a very nice correlation, except during these last 4 years over here, you can see that when prices of gold goes up, the energy goes down. And that is also when during the time, incidentally, when Biden took over the presidency 4 years ago.
That will be Donald Trump. Donald Trump and Biden, yes.
All right, yes, Donald Trump. What am I talking about? So now look at the green line at the bottom over here. Yeah, kind of like Biden there. All over me now. So this is the green line over here, which is the XLU energy. And you can see there is a very close correlation between the green line and the bottom gold line, which is bond. So you can see utility of the stocks, utility stocks have a direct relationship with the gold returns, and they are more correlated to the corporate bond than the stock index. So they follow very closely because both are safe haven, both are defensive stocks and bonds over there. So we hope this gives you a clear picture of how the gold, the bond, utilities and energy can move over the past 20 years. Okay, just to summarize, showing you a cleaner chart of the last 20 years, energy and utility. Utility has been growing very nicely over here, like bond, like the stocks as well in a way, but there is a decrease in the energy. Clearer picture here.
All right, so let's voice down. Just now was a 5 year, now it was a 1 year. And you can see that on a 1 year basis, when we talk about pre-COVID and after COVID kind of situation, we are looking at XLE, a big dip, in energy stocks. A lot of companies cannot work, construction cannot work, people cannot fly around, users of oil cannot use the oil, right? So there's a lot of production. That's why the price of oil actually went down below $0, and that is where the dip went really bad for energy stocks itself, and it has not recovered yet, right? Now we do see a small little spike over there up because we have heard that companies like Pfizer, Moderna, and now I think AZN, right, actually comes in to share. They are having a 90% and above kind of success rate of curing the COVID-19, right, creating the vaccine of COVID-19, right? So that's where people fear of missing out, or people who are thinking that the people can start to travel comes in. But then that is purely to my thinking, or my opinion is that it's still purely speculation, because we still do not see exactly whether the vaccine really works, all right, and being used across the whole country, whole world itself, right? So it could be, we do not know when will this be over. It could be just a temporary push up only, because even so, S&P 500, the economy is not doing well, but yet market price is pushing it up. So we do not know how long it can last, right? So that's for XLE. And in XLU, you can see that after the drop, in the COVID-19, because that is the fear that everybody, trying to push everything out of the way, selling like crazy. But then, that was only temporarily, right? So it's already recovering, and it almost recover before the COVID-19, right? So it's still over there, and we hope that I think it will be a nice, in my opinion, a nice trend up. because of the Biden's presidency for the next few terms, the next term itself. So that is why we can see that, comparing utility versus energy itself, I think if you are putting your money in this area, right, definitely for me, in my opinion, utility is much more better place to put my money in than energy itself. All right, and you can see that basically what just now we have shared with you in the S&P 500, the top 2 companies and the top 2 in the sector itself in energy is actually XOM and CVX. We are sharing with you so that you can put in your watch list, but doesn't mean that we should invest in, because currently we know that oil energy companies are not doing that well, right? So XOM, CVX, those are the 2 companies, the one of the biggest of the all, right, in terms of market cap. And we hope that if energy can do better, that is something that you want to read the news events to see whether is that a good, informative decision to buy in.
Right, looking at the CVX, it is interesting to compare also. You can see that the current price have already moved, the price have moved slightly, breaking off the 200-day average, while on XOM, it is still below the 200 days average, although it is higher than the 20 and 50 days average, but still below the 200-day average. And basically, it means that potentially CVX can go up, but the question is, do you want to go in or not? Because it is a whole energy sector that is not doing too well today. What are the gurus trading?
Yeah. So in terms of who are the gurus buying over the energy sectors, right? So it's quite nice to see that, because the big players, famous investors are looking into it. Why are we not, right? So we can talk about Ken Fisher, right, which is from the Fisher's investment fund itself. And Ken Fisher actually had a percentage, but it's only 0.22%. He added only like 2.47% only into his portfolio. So it's actually pretty small in terms of the number of assets being held for this company itself, for XOM. And for CVX itself, you can see Ken Fisher is in there with 0.34%, right, and at about 2.92%. So I think they are also not looking into buying too much into oil, because we know that oil is not doing well, right? So that is why it could be the direction they are just holding, right? In case it goes up, they can make some good money over there, right? And for Joel Greenberg, you can see that he has reduced, right, significantly, reduced 16.75%, and over his total fund that he's created, right, the Gordon management, and that is where you can see the asset managed was only 0.61% of his whole portfolio. So it's also a very, very small amount over there, right? So you can see if gurus are reducing, right, why maybe a question to you, should you put in your money in there? Yeah.
So notice that Warren Buffett does not trade energy over here, and also I don't think he does for utilities as well. Okay, now let us look at the shortlisting of the utilities. And remember, just now earlier on, when we look at the S&P 500, there were 28 companies there, of which 4 listed here have they are the bigger companies. And you can look at the EPS, which is earnings per share. You see that NEE, it has got a negative earnings, although it is the biggest company there. And D is Dominion, and Dominion is also minus 56. The other 2, which is Duke, DUK, and Southern. Okay, Southern is at 109%. It is a smaller company, but doing very well in terms of EPS. So if you were to look at these 4 companies, we are probably want to zoom into the 3. NEE being, a more diversified, much bigger holding company, and we like to continue to look at it. And the graph is actually very interesting, because it has also gone beyond its pre-COVID high, and it is now an all-time high over here. Although it has got a negative EPS, but interesting for us to keep in our watch list, being the top market leader in the utility sector. Then you look at the DUK, which is Duke, and Duke is actually, in fact, all the 3 companies are related to doing generation of utilities, transmission, and distribution. For NEE, they are doing more of course, electricity. They also do wind energy as well as solar energy. Duke as well, they do the same things, but There are smaller regional players, especially in the Midwest region and the Southeastern region of the United States. And the price have basically come up and recover to almost to the pre-COVID high. Look at the last one, which is Southern. Southern is a much smaller company, and they deal with energy, electricity only in 4 states in the US, and the price have also recovered tremendously, but not yet to the level of pre-COVID. So these are the interesting 3 companies for you to look at if you want to look at them, and looking at the EPS, and also you can look into their financials to see how they are growing and potentially put them into your watch list and even trade on them, especially in the coming months or years, depending on how the Biden's green energy strategy is, and you want to keep some diversification in more defensive companies over here. What about gurus? Okay, let's see who is trading. Again, we have got Joel Greenblatt and Ken Fisher over there. They are keeping 0.7 and almost none for Joel Greenblatt, and he is going to continue to reduce his position there, while Ken Fisher is probably going to cherry pick some of it, adding some of the positions there. I think Joel Greenblatt is trying to move his money to the more higher EPS companies like DUK. You can see that he is adding both Joel Greenblatt and Ken Fisher are adding positions in DUK. And for SO Southern, Ken Fisher is again increasing to another 10%. This is a new stock for Ken Fisher, while Joel Greenblatt is reducing his stakes in the SO. So there are some changes in how the gurus are playing. Again, you notice that Warren Buffett does not have shares over here.
All right, so sharing so much information about energy and utility, right? So how does it affect us? What can we do from there, right? So let's go dive into them and see, with all this information we just shared with you, what can we do? Right. So basically, let's go down into the energy sector first, right? We are talking about one of the biggest movement of the energy sector is oil, right? So crude oil is one of them, and we know that crude oil, actually in around March to May, it has dipped below $0. So in the past 5 years, on the top left hand corner chart, you can see that the price of the USD per barrel is dropping and dropping, right? So that is something that that is a fact now, and as what Wai Ming have shared, the Russia, Saudi Arabia, the OPEC, have been discussing about all this kind of oil production, right? So it's at around 41, that kind of range, $41 to $42. And in terms of the year itself, you can see the dip over there, right? March to April, the dip, and then it goes back up very quickly, back to 41 to 42. All right. So if that's the case, right, what is going to happen, after 2020? And we found that, World Bank and IMF is saying almost the same thing, right? World Bank is saying that, looking at 2021 as an average of $44, and IMF is saying at about $40 to $50. So now the price range is about 41 to 42, and if the whole 2021 and the whole 2021 is about 40 to 50, do you really think that money is going to grow in the energy sector, right? So in my opinion is that roughly opportunity cost, right? If we were to put money into 2021 in energy, I don't think there will be much growth over there unless something really major big thing happen, right? In terms of maybe vaccine is totally out of the way. So not vaccine. The COVID-19 is totally out of the way. Vaccine is here. Everybody start flying. Everybody start shipping. Everybody start moving around. Then there will be a chance that the oil price will go up, right? Because of all these activities. But then if COVID-19 is here to stay and vaccine is still not ready for everybody, the price range should be falling around $40 to $50.
Yeah, still lying low below the $50 benchmark.
Yeah. Then talking about oil, the next big thing about the energy sector is the gas sector, right? So why not let's go into the gas sector, and then we can look at how gas is going to be like. right? So unlike oil, gas is actually something that is very useful, right? And there's a high demand for it. So according to IEA, right, it says that in terms of 2020, the forecast actually was much higher. But then because of the COVID-19, people are not using much gas, and that is where the revise was actually dropped quite a lot, right? And how about 2021 onwards? The 2021 onwards, right, after they have forecast and revise the forecast itself, right, the light blue is the initial forecast, the dark blue is the revised forecast. And you can see that 2021, the revised forecast for 2021 is higher than the 2019, right? It shows that what they are going to use much more gas in 2021 onwards to 2022, 2023, and so on and so forth, right?
Recovery.
Sorry?
Recovery.
Yeah, so there's a recovery. So you can see, on the IEA, they say rebound and beyond. So we do expect that the gas companies may do better, right? So if that's the case, probably we want to see what is the portion of the company selling gas, what is the allocation and how much revenue they are making from there, and will it, help them to grow the company instead of just looking at oil itself, right? So oil and gas companies, they most of them do almost the same together, right? And that is where you want to go and do more research about it.
Okay, for the utilities market, you can see that this first group here, they are the wind energy. This is the solar energy, and this is the hydropower energy. So this was last year, this year actually, 2020, the light blue, and the purple ones are 2021. So the market is expecting a recovery of the 2021 over this year, 2020, okay, to a certain extent over here. And well, it remains to be seen how it is going to go, but this is the forecast where we expect some recovery in all the areas of the wind energy, the solar energy, as well as a hydropower energy over here.
All right. Okay, so what can we do? Right? What can we do? And this is the most interesting part that you would like to know, right? So first of all, we can look at the short-term price action currently from 2020 to 2021 until Joe Biden has been elected and being full-time in his position in January itself. We would like to see some volatility over there, and that is where we look at short-term price action, right? Until then, we will see what is the plan, and from there, then we take on, right? So energy is a sort of a sunset industry, right? Because more and more people are looking into green energy, especially the new generations. If you go and look up onto Google, onto YouTube, many people are sharing about how we should grow in our green energy area instead of burning an oil, creating more carbon dioxide and increasing the temperature of the whole world itself, right? The earth itself, right? So utility in terms of energy is something that is going to be a very big thing in the near future, right? And then again, you can read up on Joe Biden's green plan, right? Because he's going to be the next president, and you are investing heavily in US. It's always nice to see what is the president's plan itself, and the green plan is something that will impact our portfolio itself, right? Keep up to market updates. Of course, at the end of the day, what is going to happen is based on what the market is demanding, right? So always keep up to market updates and preserve cash when necessary, so that when opportunity is here, right, and when things are more settled, you can look into a better, more stable kind of capital appreciation, or whether you are taking in terms of a dividend as well, right? So this is what we can do.
Right. So what I can do myself personally is that during the oil crash, I picked up some oil stocks over there, and for a short term, and when it rebounded, I sold them. And for utilities, basically, well, it is a very safe thing to continue to grow, and it's something for diversification. Might look into the XLU and probably one or two of those bigger companies over there. Something to keep in mind for the rest of 2021. What about yourself, Jeremy?
Yeah, so what I did was that looking at Joe Biden's green plan, I was like, maybe for a mid to long term kind of basis. So what I did was that I was researching what are the ETFs for just purely green energy itself, and I found upon this ETF, which is very interesting, called ICLN, and I got a bit of ICLN, very profitable now, and and that is where I will continue to hold until we see if there's any more other big movements, right? If not, I could based on maybe 30-40% profit, I can exit out kind of basis lah. So really depends on the current market situation. Right, so it's very interesting, and I'm also closely looking at NEE also because it's the biggest in terms of the green energy company. So and it's because of the stock split now it become more affordable. So it could be a nice company to hold for me, and I'm looking closely at it.
Right. So we hope the session has been useful for our participants here. And of course, as a Core Invest Institute, we continue to bring you useful updates on a weekly basis. And we also have our corehub.me over here for world news, as well as many other news which you can find over there. So in order for you to join, there is this QR code here. Please scan it, and you can get access to all our world news as well as updates here. Apart from that, on the Facebook, we have the Modern Power Investor. So you can also join us on the closed book over here, QR code here. Scan it, and you can follow our discussions and also our new videos from the Facebook.
So once again, thank you very much for watching this series, right? And we are very happy to see you, and we hope that you can invest a smart, simple, safe way to invest. All right. Thank you very much for watching, and we'll see you on the next video.
See you again.
See you.
Bye.
Bye-bye.